Welcome back everyone. Hope you're all doing well. My name is Anthony and in this video I'm going to be talking about the SPY or the S&P 500 index and my general predictions for the market over the next couple of days and in the following weeks. So in my past video I talked about how we were going to approach this white rectangular box as a sort of high area of resistance and a bounce potential. So I believe in the last video we were right around here in our price action, and I said that we would either come off and bounce off here, this bottom half of the rectangle, and then kind of go downwards, or we would come all the way up here and then bounce down and come downwards. So it turns out that actually the day after we did do the first scenario where we did come into the box slightly and then bounce down, but then the next day we instantly gapped up around 1.2% pre-market, and we continued the uptrend for a while until we hit this upper side of the box, or the upper part of the box is derived from this downward trend line connecting the ending diagonal of this C wave correction. And that's a lot of wave theory terminology, and I'll try to dissect that a little bit more in this video. So first of all, I would like to zoom in just on the price action for today. So we see if we turn on the extended hours, this was the price action for today. And if we just draw kind of like following the price action, we see that there's a U-shape, an inverse U-shape formation. So this will be known as an inverse cup and handle pattern, and that is a bearish pattern. So we actually did try to break over this trend line for a little bit. So this would be called a false breakout, and that is also bearish because we did not have enough momentum to push higher, even though we broke out of the trend line. So overall, what happens when you do have these pattern formations is a typical slight push after you finish it. So you would come down here, then push a little bit if you can, and then come down to finish that bearish pattern. So this would fit very well into my predictions over the next couple of days. So we could see a tiny bit of a bounce, but that is just a bull trap, and it will come crashing down a little bit for some downside, because the market doesn't, if this is a start of a bull run, for example, if this would be the start of the fifth wave of our wave count. So specifically, I refer to, let's go down to the 2-hour time frame to be a little bit more clear. So if we're starting this wave to push up to new all-time highs, we wouldn't see this kind of very volatile price action over here in the market. This is just strict increase, increase, increase with very strict decreases as well. This is not very common in a bull market, especially for a fifth wave. If you did see the start of a fifth wave, it would typically be this kind of anticlimactic, kind of weak push upwards, but it would eventually get prices going up. So overall, if we're still in this very volatile trading session, this is still corrective in my opinion. And obviously, my predictions and my opinions are could be completely wrong, but for now, this is what I'm seeing, and I haven't changed anything since like a month. Like these are still the things I've been having for a month, the same targets. So nothing has changed, and everything is just playing pretty well according to what I plan. And for now, we can actually do to further confirm this price action. So we're going to do something called a. So one thing you can use for Fibonacci numbers is something called the Fibonacci time zone. So what we do is we're going to go on the 1-day time frame, and we're going to connect the peaks. So this is just to give an idea of the exact time frame, because when trading options on the SPY, and I'll go more into this in my future options video, which should be coming out soon, you want to be not holding positions very long, because SPY has very high theta decay, which means your options will lose value very rapidly. So you have very little time to be right. So it's very important to get the timing for your options right. So this tool should help kind of time that strategy. So what you do is you drag the kind of relative peaks and highs of your movement. So we see here in this very volatile session, I connected the first peak to the second peak. These are all local peaks. And we see that just with these two values, it draws out every single one of these lines, these vertical lines, based on these first two patterns. And these are based off Fibonacci numbers. And we can see that every time there's been a vertical line here, which represents around a Fibonacci level of days since this past peak, we see there's a peak here, and then we come down, and then we come up here for another peak, and then we come down, and then we come up here, and we see that the vertical line has struck on March 9th. So this should indicate another push downwards, and we'll push downwards until this level, which will indicate another push upwards. So that's just an idea. Obviously, these could be inaccurate, slightly inaccurate. The timing of Fibonacci numbers is generally predictive, but who knows, there could be some news tomorrow or some kind of political thing that happens. So there's no guarantee. But right now, all the indicators point to us seeing some kind of downward motion over the next, at least the next couple of days. So that's what I'm hoping for right now. And I want to just take a break from the SPY index and kind of look at some big tech companies such as Apple. So overall in Apple, we've been having a huge sell-off since the all-time highs. And we've recently decided to have a kind of jump, especially from today, from the tech session. The NASDAQ index, which is heavily weighted on tech companies, did jump today. So that's why we see also movement in all the indexes. So if you look at the general long-term trend of Apple, we are in a downtrend, but we are approaching, in my opinion, some interesting buy levels around here. So these are based off Fibonacci level retracements and some key support resistances. So if you're not interested in trading puts on the SPY, which I completely understand because those are very risky, there's other ways to get involved in dip buys. And I believe that big tech, after this huge sell-off, is approaching those levels. Not quite yet, but it is approaching those levels. So we should come down to around here and have a slight bounce. It could be a dead cat bounce, but it could also be the start of an uptrend if market conditions are possible for that. Or another possibility is that we come down all the way here to fill this gap. So we do have a gap here that hasn't been filled yet. And as you know, markets do like to fill gaps. Yeah, so in other words, if you're not too fond of trading high-risk options on indexes, which is definitely very risky, and if you're more of a long-term potential buyer in like growth stocks such as Apple, Microsoft, Tesla, those things, I do see some interesting levels coming up in the future. And this would make sense with our predictions for the index because we should see some sort of future dip. The exact level at which it will dip is still kind of hard to predict. I do have targets over here, but for now we just want to see some downwards price action, and then from there we can decide where we want to go in terms of levels. But if we do see this dip, it should give us good buying opportunities for high cap stocks because over the past couple of weeks, there's been a huge sell-off in the tech industry. That's why the NASDAQ indexes have dropped more than the SPY, for example. And this is particularly important because since tech has had such a huge sell-off, I don't see that much more selling in the big tech companies versus other ones. And typically, you'll see the red loss from the tech companies bleed into other companies, which is why you'll see probably some more selling in the SPY than you would in these large cap companies. So in other words, if you were looking to get into a bullish position on some companies, I think we are approaching key values soon. Not right now, but in the future, maybe in the next week or so. And I'll definitely keep you guys updated with when we are in those buying opportunities. So for now, I think that is it for this video. Just to summarize, we have a lot of confirmations and a lot of indicators stating that we should have a downwards bounce for a bit, at least over the next couple of days. For the market, it's obviously very hard to predict time-wise, like when stuff is going to happen. But in terms of just using peaks and dips in Fibonacci time zones, we should see some sort of drop in the near future. And I will come out with my Discord server in the very near future. It is basically done, and I just have some few final touches left to put into it, and I will release that very soon. And that will contain all of my option purchases and what I've been doing and possible exit strategies, in addition to watch lists that I'll recommend. And for now, I've been heavily invested in SPY puts, and I'm currently still in all my SPY puts. I doubled down on my positions at this level, so I was very clearly watching this trend line, and I did add a lot more positions to SPY puts in terms of those. Those are expiring this Friday, so that's how much I believe that we will see some sort of downwards push over the next couple of days, because a rise of well, we did have at one point like 2.2% increase in the SPY at the intraday high. So around here, around these levels, this is too much of an increase for the SPY. Like a gap up and then a 2.2% rise for no reason, in my opinion, is not very justified. So I did enter some positions around these levels, and so far they are paying off very well with these red candles. And I hope those will continue over the next week. So for now, that's it for me, and I'll keep you guys updated with new videos of what I think about the market and other stocks. So thanks for watching, and see you next time.